mind. Today, we're going to start with a conversation with Hemant Mohapatra, partner at Lightspeed Ventures India. Hemant, welcome to the show.
Thank you, Shamana, and hello, everybody.
So, Hemant, let's start by introducing our audience to the activities of Lightspeed India, the positioning, and a bit of your background.
Yeah, very, very happy to, and then thanks for inviting me here, Shamana. Great platform for everybody to sort of collaborate and learn from each other. Love the idea, love the concept. Heard a lot about you and the platform as well before, so very, very happy to be here. I'll give you a bit of my background first and talk a bit about Lightspeed as a firm and India specifically as well. So I grew up in India and I left for the US in 2003, spent about 15 years there across Austin, Texas, my favorite city in the world. And SF Bay Area, my second favorite city after Bombay. I spent my career mostly as an engineer and product guy across hardware and software companies, 6 years at AMD and then 5 years at Google, joining Google X and then evolving into a product, from a product management role, evolving into a business development and strategy role at Cloud. Spent about 4.5 years there. And saw the cloud growth, really take off from 2013, 14 to now. And as part of my journey, I did a bunch of work that that sort of allowed the cloud product to sort of scale up, and a lot of that involved investments as well as acquisitions. So I got really close to startups during those days, and I really enjoyed my experience there. And as I began investing and acquiring companies, I felt like this could be a career move for me. Why not do it as a full-time job? And at that time, I was losing a lot of my deals to Andreessen Horowitz. And then they came calling in 2018 saying, hey, you've spent 5 years at Google. Why are you wasting your life away? Why don't you sort of join us either an investment in an investing role, or you could join a startup, or if you're doing a startup, maybe that's another way to collaborate. So I figured, I was ready to move to India at the time. Figured let's try the venture capital route. Where else would you do it? If not the Valley. So joined them as an enterprise investment partner there. Spent about a year, and then Lightspeed came by and then came calling, and then things just fell into place. I've known the Lightspeed team a couple of years before as well. One of my investments at Google was a Lightspeed company. So I've had the relationship in the past, and then things just fell into place. Moved back August of last year, and here I'm the sixth partner. I'll give you a bit of Lightspeed background as well. As you know, it's a U.S. vintage firm. It's been around for almost 20 plus years now, but it has mostly been popular with enterprise companies. Although we have diversified into crypto, blockchain, consumer, and a bunch of other marketplace type companies as well over the last 5-10 years. And the India team used to be part of Lightspeed US, 2006 onwards. But 4 years ago, India opportunity became big enough and interesting enough for us to raise an India-centric, or I would call it Southeast Asia-centric fund, beginning with India. And we raised that fund in 2013. It was a $135 million fund, and we invested in roughly 20-30 companies out of that. Many of them have become global brands now in hospitality, in edtech, and a few other categories. And then we raised a second fund when I joined August last year. It's a $175 million fund, so a bit of a bump up from last fund. And we invest across all opportunities in consumer and enterprise. We love tech-focused companies that are solving for a very fundamental problem in a space that is humongous and very underserved, right? And in India, there are many opportunities like that in healthcare, in logistics, in agriculture, many other places. So we feel like the game is just beginning in India. So that's Lightspeed India. There are 6 partners there, including myself, and yeah, I mean, a couple of companies you may have heard of. Oyo is one of the biggest global brands in hospitality today. Growing out of India into Japan, UK, US, and China. Baiju's if you haven't heard of Byju's yet, you will hear about it soon because they're entering US pretty soon. It's an India-based, Chennai-based edtech company, and one of the largest edtech players in the world today, and many others. So that's my background.
Hemant, I'm going to ask you a few questions based on all the things that you said. So $75 million fund, what stage is your comfort zone in terms of investing?
Oh, it's a $175 million fund.
175.
We come in, yeah. So we come in early. Like as we are an early stage VC, so we love our Series A's and seeds. So those are the two stages that we come most commonly at. Last year, I think half of our investments were Series seed, so we came in very early, and and then so our check sizes range from $1 to $3 million for a seed, all the way to $10 million for a very, very compelling team that has a pre-product idea. So we would directly do a large Series A, which was Uran, a B2B commerce company that we invested in 1.5 years ago, and now is publicly valued above $1 billion. And then we also have a growth fund that we pull out of whenever required for larger rounds, as and when needed. And that's I think that's $1 billion point. Yeah.
So let's take a couple of the examples that you gave, Oyo and Byju maybe, and talk us through when did they come to you, when did you get involved, and what was the progression of your involvement in those companies? These are obviously companies that have raised a lot of money. So talk to that. How does that evolution happen in those kinds of companies?
So I'll take two examples. One is Oyo, and then Uran is another one that I really like talking about. This was before my time, so most of it is not my contribution to the firm and the fund. Other people have done all the hard work here. I want to point that out. So Oyo was a very interesting, it's actually a friend of mine, Maninder Gulati, who was a principal at Lightspeed, I think 4 years ago. And look, most of us are, either entrepreneurs, engineers, product guys in the past. So we sort of like this bottoms-up thinking about markets and opportunities, right? So he was looking at the hospitality market, and he had done some work on it, and he really felt there were some pretty big gaps in the market that were not addressed today. And that market was essentially around, 2 or 3 star hotels that are super disaggregated in the country. There's no brand there. There's no discoverability platform for them. They can't really put themselves up on Airbnb or Booking.com or Hotels.com. Now, people don't really, the kind of people who go there to book hotels don't really look for 1 to 2 star hotels, right? So he thought that most of India, tier 2, tier 3, tier 4 cities, had a bunch of these mom and pop hotels that had no way to sort of capture demand online. They had no way to get discovered, and this felt like a technology-based play that could become a large company. So he was looking around in the market for a founder who was addressing this, and I think after searching around, he found this one gentleman named Ritesh, a 19-year-old kid, right? He had just gotten the Thiel Fellowship, and he had gotten into, I think, one of the IITs. I think it was IIT Delhi. And so one of the premier colleges in the country, everybody would sort of kill to go there. He had gotten admissions, but then he also got admitted to Thiel Fellowship, and he quit college. Obviously, that's one of the requirements to join the Thiel Fellowship, and he joined Thiel Fellowship instead. And it came up in the news, and where he gave an interview and talked about what he was doing, and it turned out to be something very similar to what Maninder thought was the gap in the market. So hustled his way into discussing what Ritesh was up to, built up a relationship. We came in very early. I think they had just about 50 hotels at the time we came in, right? So basis that experience, we did all the work basis just this early sort of traction in the market, right? And now they have, I think, 300,000 odd hotels, at this stage now. But when we put money in, I think we put $600,000 check into Oyo that early, and then worked with the founder, built up a relationship, saw them through multiple fundraisers they've raised. Don't quote me on this, but I think they've raised over $1 billion now, right? So from the likes of SoftBank and all that. So we've stayed together, lockstep with the founder, across not just capturing India opportunity, but also expanding into China, Japan, UK, and now the US. So it's been a 5-year journey. Bejul Samaya, my partner, is on the board there. And he and the founder are so close that whenever there's a birthday in a family, his Bajel's kids write a card. This is from us, Mom, and Ritesh. They are that close, right? So, and we love that. We love sort of this kind of founder, board relationship. I think a lot of learning happens on both sides. A lot of trust is built that way. So even though, now the cap table is fairly crowded with very, very large and powerful players, we feel like we still have the founders here. The founders still trust our opinions over so many years. Where is not for the lack of having alternate point of views, but the relationship is still strong. So we like that kind of a company building process. It's our style. The other quick example would be Uran. These are yeah.
Before you go to Uran, actually, I have a question. So, there are these very large funds like SoftBank that are flushing the market with capital. They're doing it in India. They're doing it in Silicon Valley. They're doing it on a worldwide scale right now. What does that do to the early investors like you with, relatively, 175 million is not a small fund by any stretch of imagination, but in contrast to a SoftBank fund, it's a very small fund. And they're basically flushing the cap table. So what is your point of view about these kinds of scenarios, and how do you play? Do you exit into SoftBank? Do you keep going? What's the thinking?
Yeah, so look, I've not been in a situation where one of my companies is being funded by SoftBank, so maybe you should ask me this question in the future again. Not having been there and, faced the SoftBank juggernaut, what I would say is, well, a lot of this is, based on the founder, right? I think having a relationship with the founder, a relationship of trust, is where you can, you can differentiate yourself from the cap table. The cap table is what the cap table is. The mathematics you can't really deny. If you don't have the capital to fund $1 billion round, you don't have the capital. But it doesn't necessarily have to mean that you lose power and say in the company. And those things are driven not just by capital. It is driven by experience. It's driven by relationship that you have with the founder. It's driven by trust, the value you've added from the very early days. And those things don't just go away that easily. And that's what we are seeing in OYO. That's what we expect to see in other companies that we have funded.
But if you have a lot of liquidation preferences that are, preferences over your preferences, then, that's something that has to be handled by the, the smaller fund.
Yeah,
and this I'm asking you that in your context, it's happening everywhere. I think this is a problem and I've had lots of private conversations where people don't want to go on the record but are facing this problem. All the micro VCs are facing this problem.
Yeah, so we don't think of ourselves as micro VC. We have $1 billion+ fund that we can pull money out of if you want to sort of retain ownership levels. So we don't really think from that lens at all. Look, liquidation preferences are what they are, right? It kicks in when there's a liquidity event happening, right? Now, as any venture capitalist will tell you, it's a risk and reward ratio. If you think the risks are too high for you to create liquidity for your LPs, you pull something out of the market. You pull a ratio of what you put in from the cap table and turn your money back to the LPs. And we continue to look at all investments that are scaled to a degree. The liquidity created by that scale is interesting to us as a fund, and we look at those opportunities on a case-by-case basis.
Mm-hmm. So it sounds like when a situation like that arises, your global funds or Silicon Valley fund is bringing in the capital to match the round and so forth. Anyway, we don't need to belabor the point. You were going to talk about Uran. Go ahead.
Oh, Uran is like one of my favorite stories here. They're solving such an India-centric problem, right? Commerce in India has always been so offline, so one-on-one relationship, and they'll call somebody up and somebody will say, well, I'll give you this at this rate, I'll negotiate, I'll deliver here, you come there to pick it up. It's almost like a secret, like a secret science that if you know, you know, if you don't, you just don't. And Uran was funded by three folks actually, very early employees at Flipkart, one of the largest e-commerce companies in India, recently bought by Walmart for a fairly large valuation. And one of the founders was Amod Malviya. He was the CTO of Flipkart, and there were a few other folks, Sudeep and Vaibhav VG, that built the ops and supply chain network for Flipkart. And so they were very familiar with how this business is operated, right? So they kind of got out of Flipkart a few years ago, a couple of years back, and they said, we want to solve this whole. E-commerce is solved. It's being solved by Amazon and Flipkart. But what about the commerce that happens between businesses, right? It's not just business to consumer. What about business to business? Who's taking care of their supply chain? Who's doing logistics for them? Who's doing discoverability for them? Who's doing pricing for them? And there's nobody doing that in a systematic, tech-driven way. So they built a company called Ron to do that, and they have just scaled up tremendously. I think their overall GMVs are in the billions. And that all happened in the last 1.5 years. I'm quoting numbers from public records here. This is proprietary information. So, and the reason they were able to do that was because, they had the foundations really right. They knew what the pain points were and how strongly they were felt. And when they met us, they didn't have a product. They didn't have, any sort of signs of execution that works. They had a concept and they had a team. And we put in a very, very large check, $10 million odd, into the company at a very, very early stage, right? And we took a bet. Yeah, so it was a very large round for us. It was, I think it is, given a fund our size, I can imagine it was pretty out there from a comfort zone perspective, right? It wouldn't be easy to expose so much capital into a company that has nothing more than a very, very clean idea and a very, very strong team. But we did think bottoms up about that opportunity. We did really do our work. We understood that there is certainly a need, and we said, well, this need can only be solved, by these guys, and why not go hard and hungry at this deal versus, doing piecemeal? And we did that, and it worked really well.
Now, what is your current analysis of the big problems in India? So in the same vein that your colleagues went and sought out the OYO team or founder, what are some problems out there that you are looking for solutions to, or teams that are solving these problems?
Yeah, I'll give you 3 themes, and there are so many, right? We'll spend an entire hour just talking about that. 3 things that personally I find really exciting, besides the obvious for me, which is enterprise, it's going to continue going on. One, in fintech, I think India is way more advanced than most of the countries. Maybe China is the only other parallel that comes to mind. And this all happened in the last couple of years, right? The fintech regulation, the fintech adoption is just stupendous. And now that the basic problems of payments has been taken care of to a large degree by both policy as well as product, the next challenge is around what other financial products would be useful. So lending seems to be another thing where, people need, on a buyer side, they need EMI, for example, on the seller side, they need working capital. So a lot of the platforms are evolving into how do you create more liquidity on both sides of the marketplaces to facilitate exchange of goods and values. So that piece is big. Now with lending comes other challenges around collections and risk and all of that, and there are companies that we built to either solve it horizontally, eventually probably vertically, then if the businesses are large enough, right? So that's one category I'm looking at. Second is around logistics. India doesn't have the best road network. It's not like US, China. Railway network is pretty advanced, but a lot of it is very manual, very inefficient. Supply chains are not really, a lot of work happens when you shift from one state to another, and so on and so forth. Right. So the policy is coming in to make the transfer of goods easier from let's say a taxation perspective, but the actual nuts and bolts of logistics are very inefficient. An example would be when there's no electronic way to sort of confirm receipt of a package, like that comes in a truck. So there are companies coming up figuring out what is an electronic bill. How do you make that foolproof and fraud-proof, right? So that's an opportunity. So logistics as a whole is a big area which is super inefficient but very large addressable market in India. And third is agriculture. Like 70% of GDP in India is agriculture, but it's still done, you still have very, very old technologies used. Essentially, you use animals to till the land, not even tractors. The tractor penetration in India is 4% of the overall, land that is available. Yeah. Right. So you would think it would be you can't do anything without tractors, but people do it by hand. People do it with cows and bulls, to till land like that. Irrigation, drip irrigation doesn't really exist much beyond a certain category of farming. So we're thinking about, even supply chain for farming is super inefficient. You have 3 or 4 players before the produce gets to the market, the end consumer. Right, so we have village level, aggregators, then you have regional aggregators, zonal aggregators, state aggregators, then national, and then supply goes back to tier 1 cities, tier 2 cities, and then export and import. Like all of this is completely opaque. Who gets what prices? Who does negotiations? Who does supply chain? Where is my good? What are the risks? How do I price it on a daily basis, weekly basis? Nobody has any clue. So the companies who will solve that will probably become really integrated into the overall supply chain for agriculture as a whole and become really valuable companies. So fintech, logistics, agriculture.
The amount of wastage in the agriculture supply chain is unbelievable. So.
Yeah, and I actually realized that a lot of the waste is not actually in transportation, it's actually at the standing crop level because of bad irrigation techniques, because of misunderstanding demands, so overproducing or underproducing, or fertilizers are put in wrong at the wrong time, over pesticiding, things like that is where a lot of the crop gets lost. It is not in the transportation network, which is surprising to me. So anyway.
So coming back to the more mundane topic of enterprise, technology, which is what everybody wants to invest in by and large in the venture world. What is your analysis of what kinds of stuff do you see as interesting and exciting?
So coming into India, I didn't know really how deep the enterprise, startup landscape would be, and it is never going to be as deep as the US, at least for a few years now. But what is interesting is the ambition of the best founders in enterprise here is no less than the ambitions of the best founders in enterprise in the US. If you think about it, a lot of the big enterprise companies in the US, like AppDynamics, Zscaler, Rubrik, Nutanix, who are these guys? Indian guys, born and brought up in India, studied in India, went to the US. It expanded their mind, and then they executed behind that, right? They got the experience that really expanded their mind and never went back to its original size. That is now happening to Indian founders sitting in India. There are companies like Freshdesk that have scaled up to $100 million ARR. It took a long time, but there are a lot of scale.
Incubated in 1 million by 1 million.
Sorry?
Freshdesk was incubated in 1 million by 1 million in 2011.
Wow, awesome. Wow, so great, so stuff like that. I mean, this is how.
I think it was a path-breaking company, actually. Zoho was a path-breaking company, and then Freshdesk was a path-breaking company.
Yeah, so Freshdesk is a great example. But there are other newer companies as well that have scaled up really well, really quickly. BrowserStack is an example of a developer-centric company that offers developers a way to check their apps, mobile and web apps, on different kinds of browsers, right? On Chrome's version X or Firefox version Y, and then Opera and blah, blah, blah. And they have scaled to over 2 million developers in the last 3 to 4 years, which is a very interesting scale. This is a scale that GitHub was at when Andreessen Horowitz put a $100 million check into it, right? So that's a fantastic scale. Companies like Postman, they have reached 6 to 7 million developers in the last 3-4 years. These are fantastic scales. All Indian companies, Indian founders, born and brought up in India, right? So something interesting is happening to India enterprise where the founder's vision and ambition have actually crossed borders like never before. And it's not just India to US, it's also India to Southeast Asia, because there's no other enterprise company, there's no enterprise play for Southeast Asia. China is very consumer focused. The big enterprise companies in China are all hardware companies. And the rest of Southeast Asia looks up to India in terms of, quality of talent, in terms of, technical expertise. So it's a very natural fit for us.
Yeah. All right. Very good. Anything else that you want to add before we move to the entrepreneur pitches?
Excuse me. Yeah, look, I think I've been an entrepreneur before. I have to leave for my next session, so apologies for not being able to attend the actual pitches. But having tried to do the entrepreneurship journey, having tried to raise capital, I think I really empathize by how difficult the journey is. I feel the best kinds of entrepreneurs, are just so resourceful. They're almost like the word, but they're like cockroaches. They just refuse to die. They will wait around. They will survive any nuclear disaster. They'll survive the frick out of that, and the market will come to them. This is what happened with Bezos. He was not any less of a founder 15 years ago, 10 years ago, but he IPO'd in 1998. His stock was like slag for till 2007. And 2007, iPhones came up, and everybody had a device to buy things from, and then Amazon just took off. You can see it online. It's public. The numbers are public, right? And why did that happen? Because the founder survived any and everything. He just kept doing his thing, just kept building the fundamentals of his business, and the market came to him. Airbnb, the market was never ready for people to open up their houses. 2007, 8, 9, we tried to raise money from YC funded, but Fred Wilson said no. A bunch of other founders said no. A bunch of other VCs said no. They kept selling Cheerios for Obama campaigns, right? They kept knocking doors in New York to say, well, you are a blue state, right? Would you not support an Obama campaigner coming to your city to sort of campaign for Obama and open your doors, right? You trust them. They did stuff like that. And then 2008 crisis happened. People lost their jobs. In 2009, people didn't have enough money to sort of pay for their rent. Then they were open to opening up their doors to get a stranger come in and sleep in their bedrooms. And the market came to them again. Why? Airbnb just survived everything else. What else there is to do? So I feel like, just stick it out, stay resilient, stay resourceful, find a way. Just find a way.
And be creative in finding the market as they come to you. Very
exactly.
Good. Wonderful, Hemant. Very nice catching up with you. And we'll see you soon.
Yeah, great to meet you, and good luck for everybody who's pitching. Bye.